They are based here in New Zealand, and they're a New Zealand regulated broker who offers up to 500 to 1 leverage and over 26,000 tradable instruments. You can trade Forex, shares, commodities, indices, crypto, and they're an award-winning brokerage firm here in Asia Pacific with dedicated 24/7 client support and no minimum deposit. To trade with Black Bull Markets today, click the link in the description below or in the card above.
Hello. Welcome everyone to Back Level Trading. Diego's in the building. Rodrigo can't make it today, so it'll just be me. So who's in the building? Come and say hi. James, you've been waiting. Fantastic. I love that. Love the commitment. Nice and early. Early bird catches the worm, right? I'm going to be a little bit slow today, guys. I'm still recovering from a bug, so apologies if I'm not in the right energy. Okay. So, Luhe in the building. Fantastic. I love it. Luhe, don't recognize your name. Guessing you're quite new. What trading strategy do you currently trade? Vincent. Yes, Vincent. One of the BOT accelerated traders. Fantastic. And I love the commitment with Vincent. I just had a session with him. He also attended a CTI live stream as well. And now he's here in the Trading Not Live stream. So I love that. And thank you. Should recover soon. I think in the next 2 days I'll be back up to scratch. I'm just a bit slow. Energy is a bit low. That's it really. But I feel a lot better than before. So it's all good. All good. Okay, I'm just waiting for more members to join. And James Darius, fantastic. Where are you from, James? So James, Luhe, and everyone else. Where's everyone else from? Now we're going to be covering bank level trading. Who does not know what bank level trading is? Who's not aware of it? Is there anybody new to bank level trading or even just trading out in general? Paulo from Portugal. Hey, I remember you from last week. Fantastic. And Luhe, fairly new to trading, but been learning gold cycles and pivot trading. Okay. Interesting. How new? Well, obviously, probably within a year. I love, when you're new to trading, it's so fun, just learning, progressing, losing a bunch of trades, blowing accounts or whatever, but you just get better and better every single time. Even myself, I'm constantly getting better as a trader. You're always learning from your trades, right? It's really important to journal. Do you journal your trades, Luhe? Yeah, around a year. Yeah, that's completely fine. That's actually cool. James, Liberia, West Africa, nice. We do have a lot of Africans in the building, especially South Africa. There's a lot of traders from South Africa. We need to open a trading floor in South Africa one day. There's so many of them there. The Luhe, I'm from the Cayman Islands, but originally from the UK, Brighton. Oh, nice. Cayman Islands, fantastic. I'm jealous. The weather must be nice down there. Crypto Naga, top of the day, everyone. Fantastic. Glad you can make it, mate. South Africa is in the building. Refilo, and Fritz from Nigeria. Amazing, fantastic, cool. Okay, let's do this. Is anybody here new to the bank level trading strategy, which I'm going to cover now? I'll be interested to know who's actually new. Just type a 1 in the comment if you're new, and type a 2 if you're familiar with a bank level trading. Ah, interesting. Okay. Interesting. James is new. Paulo's familiar. Yeah, I've definitely remember Paulo. Reflo is new. Lee, familiar with back level trading. Fritz is new. Fantastic. Okay, okay. Now there's more people watching. There's around 30 people watching. Come on, guys, tap a 1 or a 2. Don't be shy. In the meantime, little backstory. I've been trading for a decade now, trading small money concepts with patterns and Elliott waves. I filter out low probability banker blocks, imbalances, which is essentially SMC levels, but we draw them differently at bank level trading. And we have another entry called the MLP or the MLP fusion, right? So we have a bit of a twist to where your traditional entries are drawn, but we also use patterns and Elliott waves to filter out low probability SMC levels, right? This is where the edge comes in because a lot of traders that trade SMC, they don't know which one to take, right? So this is the key to bank level trading. 1.5, I love that. Master Effects, love the name. N, neutral, okay, I guess. Leandro, new, fantastic. Okay, brilliant, brilliant, brilliant. In the meantime, if you're interested in more consistent live streams, we do have a trading floor on Discord in CTI. We do live streams on Monday, just to recap last week and to forecast the current week in the... my mind just went blank there. This is how you know I'm a bit ill. Mondays, I forecast the trades for the week. Wednesday, I do a recap of the week and I forecast the New York session and any potential trades for the week. Oh, that took a lot out of me. So yeah, if you're interested, join the Discord community. And I've just posted the link to Discord if you're not part of the Discord community yet. And there we go. It's all been posted. Okay, fantastic. What strategy does everyone trade as well? Curious to know. Crypto is that smart monkey concept. I think you meant smart money concepts. Yes, bank level trading is smart money concepts. The only difference is that we use patterns and Elliott waves and some other concepts to filter out low probability smart money concept levels and high probability levels. This is what we do at bank level trading. And Niger two-day guy, mine's fantastic. And you can make it. Okay, so let's recap what has actually happened on the dollar. There's been a pretty incredible move to the upside, right? And first things first, with the dollar, well, quite a lot of, I mean, what's happened here, to be fair, there's good profit. Yep, definitely. And also, hold on, Toby, how to enter for a valid trade. Yep, I can cover that soon. And I was trading the range on E. Fantastic. Yep. Okay. Crypto trade structure. Just structure alone. Interesting. Okay. Paolo trading the ranges. Toby trading wants to know a valid trade. Paolo, good profiter. And where is the Discord link? I just posted it. I can just send it again. Right here. There we go. It's right there. And at CTI, we do daily live streams, we do funded accounts, we do challenges. There's more strategies, not just bank level trading. That's the STT. There is the corrective, and a lot of other stuff. And also, you can get involved in algo trading as well. There's more information on the Discord. And Night Loge, I do trade gaps based on dollar. Nice, I love that. Something unique there. Sabri XAU, absolutely. Fantastic. Okay. So we're going to start with, also, by the way, if you hear my son in the background playing with his mother-in-law, just ignore it. This is a live stream and this is real life. So you are going to hear some noise. So don't think it's unprofessional. It's just life, right? So anyway, let me get into it. So with the dollar at the moment, there's obviously been a massive move to the upside. But it was quite inevitable because of the pattern that we've got here. Nice sort of compression pattern, as you can see. And also, I was actually expecting a stop hunt of this area to get filled. Right, I was expecting a stop hunt, multiple equal lows, but it ended up going a little bit sooner. So if we update the pattern, see what's actually happening, I'm still expecting the dollar to retest at the bare minimum this imbalance, right? But mainly because there is in fact a breaker structure to the upside, right? If we update the ranges on the H4, even if we go down here, I'm going to show you one of the concepts up on BLT. We can start anywhere on the H4, like, you know, we start on a higher time frame. Follow the market round. There's been a breaker structure here. As you can see, nice breaker structure, relevant high. It's now making new lows. And since that was the new high, we've got a new range over here. We've got a liquidity grab right here, and we've got a liquidity grab right here. So right now, there's no breaker structure, right? The way bank level traders, the way we do it is we need a clear breaker structure. This is a liquidity grab, and this is also a liquidity grab. There's a few rules and techniques for this, but you know, that's something I can cover at a different time or just for the BLT members. But I'm just giving you guys a main sort of concept around it, right? So if we continue, even all of this, believe it or not, all of this is a liquidity grab, right? A lot of traders will see this as a breaker structure, but the way we view structure at bank level trading is a little bit different, right? So we are still within this range on the H4. Obviously, to get the sniper entry, you need to be combining all the time frames when it comes to breaker structure, liquidity grabs down from the H4 to the M1 to even the 15 seconds sometimes, if there's no clear information on the M1. So we continue. We're still within the range, Literally, this is just not tradable on the H4. Over here, we do have, I'll say this is a new range now. Made a new low. Range is getting smaller. We've got a liquidity grab. Then we've got a bullish break to the upside. So we update the range, right, towards here. Now we're in a bullish range. So you should be looking for a bullish setup. It then made a new high, as you can see. That's a nice clear break. And then it turned bearish again. So now we're in a bearish range. So we should be looking for bearish setups. And we just keep on updating the ranges accordingly, as you can see, right? So if we continue trading this way, I just followed the market round. I'm going to update everything in a minute. You can see liquidity grab all the way here. Made a new low right there. New high. All of this is a liquidity grab. We do have a breaker structure over here, as you can see. Liquidity grab, and oh, look at this, new low. Update the range. Boom, breaker structure. And guess what? Now what's going to happen? Price is going to be a magnet to this banker block, this imbalance. It's just a complex pullback. Let it do whatever it needs to do, whether it does twink twirkles, go sideways, or whatever happens. Honestly, ignore what's going to happen in terms of if you're trading this time frame. Just bear in mind that price is going to be a magnet to this area. So in the meantime, doesn't mean you just stop trading. It just means that this is where there's going to be long. So you should be looking for shorts. So I'm looking for shorts around here, but I'm also looking for longs. We're playing ping pong with the market, up and down, using the BLT. We can catch these trades for shorts, these for longs, these for shorts, these for longs. And until a larger pattern comes in, then we know that's also going to be short. We're just following the rules. We're flowing with the market. We're updating the patterns, right? So if we were to update this pattern, right, although there's been new patterns around here, look, this pattern here, 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 and buys here, shorts. So we're trading everything at BOT, and potentially there's this as well, and a boomerang up here. Even if it drops down here, we're looking for long spot. I'm still wary of this point of interest, even though I'm buying and selling, right? So at the moment, with the dollar, I'm expecting price to have a bit of a big drop towards this point of interest down here, minimum, or a multi-liquidity pool, right? Yeah, you are going to hear the family in the background, my mother-in-law and my wife. So just heads up, and it's going to be quite loud because they're right next door. So I'm not even going to apologize because it's family, isn't it? But yeah, it's not going to be professional. Either way, we continue. With the dollar at the moment, I'm expecting, there's a lot of bullish momentum. Then we're expecting shorts. We could look for some shorts and then potentially some longs and then shorts again. And even while we're dropping all the way down here, there's going to be buys as well, right? And if we look to the left, we do have some equal highs. We've got a nice little liquidity pool, and this is wise rejecting of this point of interest. So this has potential to drop, but are we going to be using this liquidity pool? Many smart money concept traders will. A lot of traders are shorting it now. It could be on the larger time frame. Nice tight entry. It could be targeting this area. This is a typical SMC entry, right? The reason we want to take a trade here is because we use patterns to filter out these SMC levels, these smart money concept levels, and this to us is low probability. So we don't trade this. We wait for the stop hunt of not just the SMC level, but also the stop hunt of the larger pattern, and we're looking for an SMC level up here. This is high probability. So we're filtering out not just this area, not just this back level here to the left, and not just this imbalance as well. We are filtering out everything. So all these are entries. We just wait on our cards, on our hands. But that's what I'm personally waiting for. But in the meantime, because I know there's a high probability price is going to climb up, I'll be looking for buys from around here, right? Buys from around here. Take out the stop hunts, take everyone out. Even if you're an SMC trader, yes, I'm aiming for your stop. And we're going to be looking for buys from around here. Oh, hold on. So Rodrigo's in the building. Let me just add Rod to the building. Yo, hey. Rodrigo, yes.
How's it going?
All good. Just breaking down the dollar. Salam, bro.
Wa alaikum salam. Yeah. Hi, everyone. How's everyone doing? Yeah, just watching your analysis. Looks good. I was looking at the DAX 40 actually with one of my students earlier today. Really nice move. Really nice trade. Nice. I might be able.
I remember DAX. We used to trade DAX back in the day. DAX on Wall Street, scoping on the 5 minute. Remember those days?
Yeah.
Now we can do it. But back then, guys, imagine just learning how to trade about support and resistance, and then boom, you get thrown into the deep end with no risk management, no smart money concepts, just straight DAX and US 30. That was hard.
But you know what? I'll tell you guys what happened. So I started working with this new trader. He's managing about 140k at the moment in his portfolio, but as a swing trader. However, he wants to do day trading. So, but because he's based in Thailand, right? He's an English guy, lives in Thailand. He runs a kickboxing gym. He wants to do more day trading. So my particular strategy uses bank level trading concepts, which borrows a little bit of SMC, a little bit of ICT, a little bit of Elliott Wave, a bit of everything, right? And so, but I don't trade the London Open, but because he's based in Thailand, he has to trade the London Open. It's like 2 o'clock in the afternoon for him. Whereas for us, obviously it's 7 a.m. But at 7 a.m., I'm in the gym. Yeah, I'm pumping weights. So what I realized was that when I started back testing the DAX using my strategy, the BLT strategy I use, it was absolutely perfect to the T. Because during the London Open, so we've done some back testing together, and yeah, it's exactly the same. That the same strategy I use for indices, US indices during New York, it works for the DAX for the London Open. So very, very pleased about the results so far with that. It just goes to show that once you have a process, once you have a strategy, you can adapt, right? So I can very happily, I can go live in Thailand now for the next 5 years and trade the DAX. That's it.
Yeah, literally.
But because we're based in the UK, it's a lot easier for us to trade the US session. That means that we can do these type of streams in the morning. We can do coaching. We can do all sorts in the morning, sort everything out. By the time New York starts, bam, ready to trade. So for us, we trade the US market, the US New York session.
Yeah. Yeah, 90% of the time. On a rare occasion, on the London session, if you just scan the markets, if you see an obvious setup, then fine, we may trade it. But 90% of the time is the US. I recently just had a one-to-one coaching session with a trader as well. Vincent, and he's based in Asia, so he's going to be also trading the London session. The New York session is just too late. It's like 6 or 8 p.m. or something down there.
Yeah,
and there's no point because that's his family time. So we're just going through trading sessions and everything.
Yeah, I mean this is the power of having a mentor, right? It's being able to work together one-to-one and go through those back testing sessions. That I love these back testing sessions, especially on a one-to-one, because what it allows you to do it, you end up tailoring a strategy for that particular trader. That's what I love about mentoring. So now this particular strategy is tailored, is bespoke for this trader, for his time zone, his personality, what the type of returns he wants. So he wants to be a 7-figure trader in the next 12 months, right? Now he's got his swing strategy, which he continues to trade, but now he wants to do day trading. So he's going to get a lot more signals. It's a different mindset as well, different way of thinking. So that's what I love about mentoring. And it's just being able to create these strategies that are bespoke, and what would have taken him maybe 2-3 years, bang, 2-3 months, he's sorted.
Yeah, 100%. I was just going over with Vincent, when it comes to with prop firms, it's always good to diversify your strategy, right? So what I'll advise is, if you've got a strategy, you should have a hybrid account. You should have an account where you wait for confirmation and an account where you don't wait for confirmation, right? So the trades where you wait for confirmation, only take those trades. The account where you do wait for confirmation or whatever I just said, just do the opposite. Take only those trades and have an account that's hybrid. And also you can diversify it even more and have a scope in entry and a swing trading strategies. It's all about diversifying everyone, especially when you pass challenges. It's also important. Yeah,
absolutely. Because if you got, each strategy is going to go through its drawdown period. The last thing you want is for your entire portfolio to be down. That's
it's happened to me recently. My conservative account, that has been a bit wishy-washy in the last few weeks, but then my aggressive has been in an uptrend. So luckily I'm diversified. Had I been trading everything on one account, it would have been, well, probably still profit, but it just wouldn't be that much of an obvious gap between both accounts. So that's just so important. See, trading is a complex matrix, right? But you need to really simplify it and tailor it to you. It shouldn't just be one account, one strategy, one entry, one rule. It's not really that simple. I know people say it's simple, but it's not. It's complex in the beginning, and then you make it simple.
For me personally, I find that you got to simplify it in the beginning, and the reason why is because you need to be able to consistently follow those rules. Now, if it's too complicated and there's too much discretion, then especially at the beginning, the trader he's going to struggle with their mindset, right? They're going to struggle with of not being able to get the results right away, especially if there's, they don't know what part of the system or what they're doing is wrong. It's like, okay, one minute you're trading a fair value gap or an imbalance or an order block. Next minute you're trading a breaker or supply zone or whatever, right? So for me, in the beginning, especially what 99% of traders don't do is that they don't focus on the skill of consistency. So consistency and following a process, that's a skill. Being disciplined to do it is a skill. Now, most traders don't have that. So even though you might have a profitable strategy, you don't have the discipline to follow it. Let me know in the chat. Just type a 1 in the chat and be honest. If you have a profitable strategy, but you struggle to follow the rules, you struggle to be consistent with it, type a 1 in the chat. Be honest, guys.
Yeah, it always baffles me when there's a strategy and you don't follow the rules. It gets to the point where you have to follow the rules at one point. Like, for example, I actually broke my rules the other day, if I'm honest. And I broke my rules because I was trading when I was feeling sick. And guess what happened? I took a loss on euro because I missed one very specific detail. And that detail, I would have realized it if I was in the right mindset. So that's kind of just breaking the rules. But when it comes to your checklist, I think that's probably the most important thing. If you have a checklist, you have to follow the rules. If your checklist says you need to wait for A, B, C, and D, but then when it comes to the actual trade, you only get A, C, and D, you should not trade. There's no need to trade. You don't want to deviate from it. You don't want to break the rules. And the same applies to your trade management. Your trade management, you should have rules for when to move your stop loss, when to be scaling out, when to move your TP. And if you've got rules for trade management, then that's going to really help with your psychology, right? Because most of the times, if you're in a trade, for example, and you're in this long, right, and you're expecting this, and it starts to pull back, this is emotion. This is psychology coming into play. And what you're going to do, you might come out because of fear of losing profits, fear that this might come down and take you out. But if you've got rules where this tells you do not come out until X, Y, and Z happens, then immediately you eliminate the psychology aspect of it, and it just makes it a lot easier. So you need rules for everything and just never deviate from them. That's how simple trading should be. And that's the difference between a professional trader and a trader that's still learning the ropes.
Mm-hmm. Yeah. And as you can see, there was quite a few of you that, you typed in a 1, and it's the truth. You have a profitable strategy, but you struggle to be consistent. Well, that's because you haven't spent time to be a consistent trader. So be a consistent person, be a disciplined person. Now, I'm going to give you a big tip. All right. For those of you watching, for those of you participating, write this down. Okay. Because when it comes down to developing discipline, it doesn't just happen when you're on the charts. Discipline has to be 24/7. Yeah. Outside of trading, you need to be disciplined. If you're going to wake up at a certain time, you need to be in bed by a certain time. That discipline, that consistency is important. Another big tip is doing the uncomfortable, right? So and making these hard choices. So I'll give you an example. This morning, I went to the gym, had my routine workout. Now it's -2 degrees outside and it's snowing. Yeah. And we have a new habit. We're doing the Wim Hof breathing after the workout. We go into the sauna. Then afterwards, we go outside for some Wim Hof breathing. And for those of you who don't know Wim Hof breathing, just YouTube it. It's a brilliant technique, absolute game changer. But because it was cold and it was snowing, we were like, maybe we should skip it. And I said, you know what? No, let's do it, because it's consistency. Like, no matter what the condition is, you got to do it. So even though my mind and my body was like, oh man, this is going to be cold, it's going to be uncomfortable, I did it anyway. And I'm so glad I did it, because your ego is always going to push you for the easy choice. It was easy to go back into the sauna, right? It was easy to go back inside and just not do it. It's easy not to follow your trading plan, right? It's easy just to risk a little bit more this time. It's easy just to chase your losses. Yeah, it's easy, isn't it? You get away with it sometimes. And the market, if you look at the price action, and Diego is going to show you an example right now, because I can see one right here. The market is going to induce you to do the wrong thing, and it's going to reward you for it. The market rewards you for doing the wrong things. And the reason why it does this, the reason why smart money does this, and their algorithms do this, is to induce you to place your stops where they need liquidity. So when you see these institutional moves, institutional price action, and then it ends up going the opposite direction real quick, that's an inducement. That's inducing you to place your stop loss where they want it, exactly where they want it, right? ICT refers to this pattern as seek and destroy. Yeah. So there's so many examples on, I can see one on this chart already. Just before those equal lows, there's a big move down, right? There's a break of structure, right? But actually, that's an inducement, because then it just goes the opposite direction. So you've got to be able, if you want to develop consistency, you got to do it outside of trading. You got to condition your mind and your body to do the hard choices. So when it comes to price action, when it comes to day trading, you're not going to be tempted by fear, tempted by greed. You're not going to be tempted by price action inducing you to enter late. Yeah, you're going to be following your strategy. And so I hope that's been valuable. Let me know. Let me know if that's been valuable for you on the chat. Hit that like, of course. And otherwise, we can continue with the charts. Just wanted to make a point.
Absolutely. Thank you for sharing, Rod. Yeah, like don't even need to summarize what Rodrigo said. He more or less just nailed it when it comes to consistency. And also when it comes to psychology, it's not just trade management that's going to help with your psychology, but it's also being aware of your trading when you're entering the trade, when you're executing, and how you felt after. If you can record how you felt, use your emotions as data points, backtrack your previous charts and see where you were feeling confident, compare it with another chart where you felt a little bit hesitant when you entered a trade, and actually analyze what happened that day. Backtrack your routine on that day and how you slept, or why did you feel hesitant. A game changer for me was when before I used to feel hesitant in a trade and I still react emotionally out of it, but over repetition, and when I look at my journal, every time I felt hesitant, the trade will go against me. But now I'm actually aware what the feeling is. And when you're aware, when you're feeling hesitant, next time now, if I feel hesitant, I'm not trading. I need to be composed. I need to be confident about the trade. You should never take a trade if you're feeling hesitant, or even if you're managing a trade, you should not feel hesitant. You need to feel confident. You need to feel in the zone. Even if it's going against you, you need to feel confident in the zone. Why is it going against you? Well, you're still following the rules, right? But if you're recording your emotions, that's really going to help you a lot, rather than just trading and that's it. You need more than that. You need to really equip yourself with everything when it comes to the markets, because the market, you're up against top traders. It's not just you trading a trend line, it's you against another trader that's actually analyzing the routine, their emotions. They've got rules for everything. You need to really be prepared. Okay, let me start. Let me just see what's the comments for valuable. That's a gem. Always gems. Oh, sorry. Become a giga champ to become a giga trader. I love that. Legend. And I see Messi in the building. Yeah, Messi. Okay, Messi's a legend. I like him. I'm a Ronaldo fan, but I think Messi is he's not human. There's a difference. Messi is just, yeah, he's pure talent. Yeah. Okay. Let's not get into football, because that could be a different conversation. Okay, so let me quickly recap what's happening with the dollar. Like I said earlier, it looks like a good point of interest. I'll personally be using this liquidity pool here, which is bang on accurate. You can see here, nice little reversal. So this is a good entry to be getting involved. Good exit, actually. It's a good exit. In terms of entering, I would personally wait for a rally to the upside and then look for shorts, because it's what we do at BOT, right? So let it trigger price action. But like I said earlier, we ideally want to be looking at some longs from around this sort of point of interest. And you can see the way it's reversing already. It's not convincing. It's just very corrective. And what does that mean when it's corrective? Well, you've seen it before in previous examples. You know, if it's corrective of one side going down, if it's descending correction, it normally goes up to the upside. Vice versa, if it's corrective to the upside, it normally drops to the downside. Here, corrective, we're expecting a rally to the upside. So this is a bit of a trap. Can still get involved in shorts, but I'll personally be looking for longs. It's just higher probability than the short at the moment. That's more or less my game plan, to be fair, on the dollar. And you guys were here before Rodrigo came in terms of the main game plan for the shorts towards these point of interest down here. Aussie currently at a third tap. And also we can see, I believe it's within a liquidity pool. Yeah, I believe it's at a liquidity pool. Hold on. Bang on that liquidity pool. That's a bit of a plan A liquidity pool. Plan B, sorry. So yeah, nice little potential entry there. For a long, but obviously since we're BOT traders, we're expecting the longs to happen outside of it. Then you can look for some longs. So and if you look here now, we do have a bit of a large imbalance there. Nice large point of interest on the H4 to get involved on a potential long. Euro, similar thing. There's equal lows here. Expecting this point of interest to get filled. And we also have this pattern at the moment. So taking a long here is very, very risky if you're a BOT trader. Very, very risky. And if you're not a BOT trader and you're just taking a long based off this range, right, could work out, but I'll be a little bit careful. So I'm expecting two scenarios, really. This to continue going short and then longs, or we could get a pullback, grab liquidity from here. There's plenty of liquidity, and this could be the fuel to take us down towards this point of interest on the euro. Dollar yen, covered the live stream earlier at CTI. Let me just share the link to the Discord if you guys are just joining. Going to share the link to the CTI Discord. So Trade and Flow, we do that live streams there as well, more consistent ones. We've got more strategies, not just bank level trading. We've also got STT and corrective, and we do funding. right? So we're not just a funding company, we're also an education company as well. Okay, this is the link to the trading flow if you're interested in joining. And shoot us a message if you want to know more about the mentorship program with Rodrigo or the mentorship program with myself. We'll give you more information. Just schedule a call. And this is, there we go. Link is up and running. Expecting longs. If we can see some longs, I'll definitely be targeting some longs on dollar yen. But at the moment, it's still not showing me some clear indication. It's just gradually dropping. It's just profit taking, really. You can see it's still a little bit early. Right, definitely be mapping out these equal lows. You know, liquidity pool down here, plan A, plan B. And there's also banker blocks and imbalances and multi-liquidity pools all the way over here. So we're not going to go into too much detail on those levels. Just look at this range here for a point of interest to look for longs, depending on the pattern. So far, this is what I've got for the dollar yen, dollar CAD at the point of interest. Just mapped out the equal highs. So that's basically done now. Equal highs is done. Completed this pattern. So this looks like a good short on dollar CAD. And it's a nice structural point as well. Got 1, 2, 3, 4, 5. Nice mini little boomerang. But I'm still expecting a further move to the upside. And we need to update the pattern and update the boomerang. Sorry, the Elliott waves to get the correct point of interest. Get that sniper entry. Aussie yen, I'm not trading it. This is just a request earlier. Cable. Yeah, cable's quite similar. We're just expecting a boomerang of the larger pattern. And then we've obviously got Dow is still, this needs time to develop. We need a stop hunt. And there's multiple points of interest here to the left on Dow. Same with S&P, etc. So yeah, that's the game plan, guys. Expecting longs, but not yet. Maybe sometime later today, I'll be looking for longs, if not tomorrow. Pound yen. I can definitely cover pound yen. GBP, JPY.
Anyone trading indices? Let me know in the chat.
Pound yen. Okay, what's this? Interesting. Okay, let's zoom out. This needs to be updated. There we go. Yeah, looks like this pattern is done. Definitely be targeting this low at the bare minimum. So it looks like pound yen it's just bearish at the moment, to be fair. And there we go. So at the moment, on the lower time frames on pound yen, I would definitely be looking at taking out this equal lows that we've got here. And then look for a liquidity pool to the left, which should be this one right here. And this is a good point of interest. So with pound yen, it'll be interesting to see if we can look for some shorts towards at least this point of interest there. Obviously, the lower time frame you go, and when you wait for confirmation, the risk reward is obviously going to be a lot higher, right? But at the moment, I can't really see any trades unless we sort of let this pattern here develop. Look for a bit of an imbalance here or a banker block bank level above, more points of interest, and then obviously we wait for confirmation, and you can take a bit of a short somewhere there. Entry still not really valid yet. We still need further confluences. Nice little potential 9R on that one, but definitely shorts on pound yen by the looks of it.
Power's talking today, yeah. Nice crypto short entry. Oh, decent. Okay, so you're short from 162. Nice, 162.934. Stop loss 162.984. 984. Oh, look at that entry, guys. Yeah, I would hold this all the way down here. That's a 20-hour trade. Don, I'm looking to go long on GJ. Yeah, the long. Yeah, there is potential for longs. I mean, because the target is gonna be down here, right? But before it does that, everyone needs to get whacked out. It's just the way it works. It needs to be manipulation one way or another. I mean, we do have equal highs, we do have equal lows. I'll be expected. I wouldn't be surprised if it grabs liquidity here, drops, does a stop hunt from this banker block, goes long, and then goes short, right? Really, anything can more or less happen. This would be a good little conservative TP if you're currently short. But definitely my brain is fried today. Watch out for the equal lows. Yeah, today's profile I think is going to be a snap and bolt. Yeah, potentially. It looks like today's a volatile day, isn't it? All right, this is done. Definitely some liquidity here. And this indices has room to the downside. There's going to be a bit of a healthy breakout to the downside on indices by the looks of it. I'll let Rodrigo cover it in more detail. Just a little more wiggle to the downside, which is in confluence with dollar, since there's some wiggle room to the upside. So, Rod, do you want to cover indices?
Yeah, sure.
Cool. And next, DXY is still going to move up one last time. Yeah, I believe DXY is going to move up. I think it might move. Yeah, DXY is still not really that valid yet, to be fair. Yeah, there's a lot of room to the upside. Yeah, lots of room to the upside. So dollar strength. And with the BLT, we focus mainly on the first move, because the first move, every time I refer to the first move, is this. Look, it's just this move here. This one move is enough to make 3 to 5 off for the day. Even when we take a short, the first move is enough. 5R, 3R, sometimes every now and again 10, 20 or whatever. But we're not here to hold trades long term. We want to bank aggressively at TP1, and then we can manage the trade accordingly. So it would be nice to catch a long on dollar, meaning, I mean, this is kind of ideal. Look, a nice short towards the downside. Look at that momentum, current compression on the H1. Just a matter of time, to be honest, before this drops. As you can see, bearish momentum, bouncing very corrective. One move to the downside, that's going to be a good play. Euro, same thing. It's got so much room to the downside. Dollar yen, a move to the upside. So basically, dollar strength, indices weakness. That's the game plan by the looks of it. Really do like Aussie.
All right. So anyone trading indices, let me know, and then I'll see what I can cover for you guys. But I'll show you what I've got so far. Okay, so let's have a look. Right. Yeah, you can see we've got some a very strong bearish price action. So if we go over to the daily time frame, yesterday's close was very bearish, but we didn't quite fill this entire candle. So we might get a little bit further downside, and I'm looking at this daily rejection block. But yeah, definitely still bearish on indices. Now, yesterday's comments are obviously being priced in, but it looks like the market has already pretty much priced that in. So the downside might be subdued. It might not be very, very drastic. We'll see what happens next. But overall, from a day trading perspective, from intraday perspective, we've got this buy side liquidities that just got completely purged. Price is now coming lower. Looks like it's targeting these liquidity zones. I am favoring the from a higher time frame perspective. I am favoring further downside within this trading range. However, I wouldn't mind taking a quick scalp to the upside, targeting this imbalance here. So let's map that out. Here we go. So if we go down to the H1 on the S&P 500, we can see, oh, there was such a beautiful short earlier this week. So on Monday and yesterday, very, very nice short. But I digress. So looking at today's price action, there is this order block here. This is a H4 order block. And also, yeah, this is a banker block. There's some imbalance. The price is actually reacting to inside this imbalance. So I am expecting a little bit of further downside to take out these relatively equal lows. So let's just map these out. Here we go. So we've got these prices just gone below yesterday's low. But I do think it will have further into the upside, to the downside, but into this point of interest. So I would like to actually find a short to scalp it down here into this point of interest, but then take longs before price then targets this higher time frame imbalance, right? So let me show you what my trading idea is. Something like this will be what I'm looking for, right? So this way, this will induce shorts, take out the shorts here, liquidate more shorts, induce more longs in this process, and then completely destroy longs back to the downside. So this is, you got to think like an institutional trader. You got to think, right, how can I rug pull most of the market? Right? That's how you got to think. Where is the rug pull? And right now, the rug pull, I'll show you this. This is Asia. Don't know if you can see that, but this is the price action. This is a very, very usual pattern where we've got Asia session range, and then price takes out the Asia range, and then it goes completely opposite direction. So longs get induced, well, shorts get liquidated, and longs are induced, buy stops triggered, price tanks, takes out the longs. So it's what we see here, but on a smaller version. Yeah. So this is what I'm seeing. So this is what I'm seeing on the S&P 500. I also wanted to show you guys this this trade that was one of my students took this morning on the DAX. So this was a very, very, very good trade. And as you can see, we've been back testing together, back-testing the strategy together, getting multiple signals, and this is on the H4 time frame. And so yeah, as you can see, there's a lot of work that goes into trading. Don't think that you can come into trading and think getting this particular entry or any other one of these entries is that easy. It's not. It's definitely not that easy. Definitely not that easy getting these type of entries. All right. But if you put the work in, then, and it's the right work, you got to do your back testing. You got to find your trading plan, and then you got to stick to that trading plan. That's the key. But on top of that, whilst you're doing that process, you got to have a psychological strategy. So it's not, this not the strategy itself is not enough, right? You got to teach yourself discipline, right? You got to learn how to follow the rules. Okay. You have to be in a constant, like, perpetual state of presence. You got to be so present. You got to be so alert to be able to catch these moves. But here on the DAX, we had a really nice run, very similar to what we're seeing on what we saw earlier with the S&P 500. So we have Asia session getting completely shorts getting liquidated, longs getting liquidated, shorts getting induced, shorts getting taken out, longs getting and now longs are getting induced. And where are the longs? Where are they going to place their stops? Well, they're going to be trailing their stops here and here. So we'll definitely like to see some sort of a short to the downside. Perhaps maybe, let's have a look. Yeah, I would like to see some sort of short over here to take out these. So this will be a scalp for the for New York on the DAX. Going back to the S&P 500. Yes, I'm looking for that. I'm also looking for a small pullback to then take it short, something like this. So that's what I have on the indices so far. Okay, I missed some of your comments, guys. So we got Vitu trading the US 30. Is that a volume meter at the bottom? Yeah, the reason why I use so I'll explain how I use my volume. So this is just a normal volume indicator. But as you can see, I've got my New York sessions mapped out. Yeah. So these are the times when I'm trading the S&P 500. And as you can see, yeah, that's when the volatility, the volume really kicks in. That's when I want to be active. Yeah. So I want to be taking trades, entering and exiting during this period here. Yeah, so it's not the entire US session, but it's the first initial couple hours. Yeah, you're welcome, Billy. Yeah, there's a lot going on in the macro, with as Getzler refers to Daddy P, Jerome Powell. Yeah. I, look, the way I see what's going on is that the market is always going to be inducing you to do the wrong thing, right? It needs that liquidity. So the market is designed to take as much money from you as possible. That's really what it's designed to do. I think that's actually a quote from Warren Buffett, that the market is designed to take as much money from the market participants as possible. Yeah. So you gotta decide, and you gotta understand that, right? You gotta decide, right? Am I giving the market money, my money? Are you gonna be blowing up? Are you gonna be, undisciplined, or are you gonna learn to be disciplined and actually extract the money from the market? That's you got to make that choice. But obviously we are all here because we want to make money from trading. We want this to succeed, but the reality is that you're not doing enough. You're just not doing the right thing. You're focusing on the wrong things. Yeah. And your focus is wrong is because you haven't been taught about the psychological framework that you need to use as a trader. So if my advice to you is go seek knowledge from those who understand trading psychology. Yeah, because if you don't have the knowledge, the opposite of knowledge is ignorance. If you don't have a psychological framework that's going to teach you and help you to be disciplined, then that means you're ignorant. And I say it with all I say it with love. I want you to hear these words so that you then stop focusing on the wrong things and start focusing on the right things. There's so much content out there on YouTube that talks about trading psychology. There's so many books out there. Why are you not reading them? You should be absorbing as much trading psychology content on a daily basis, more than you focus on strategy. But you choose not to. I don't understand. I don't get it, guys. I don't get it. But it is what it is. It is what it is. So hopefully you guys are taking these nuggets, these gems, this advice, these tips. This is a trader to another trader. I'm telling you, focus on your psychological framework. Just like you have a strategy for your trading, you need a strategy for your psychology. So let's, I digress. Let's continue. Right. Let's see if we might be able to get a trade today. Price is actually starting to pull back on the 15-minute. Let's have a closer look. So Diego was anticipating further upside on DXY. So let's have a quick look at DXY. DXY. Okay, DXY is pulling down now. DXY can definitely just tank from here, to be fair. I mean, this is a massive inducement, but whatever was said yesterday has already been priced in. So this is just going to be profit taking. When I see moves like this, I usually there's usually a very deep retracement, especially take out this low here. But it doesn't always happen, such as this. There wasn't a deep retracement yet. Actually dropped for quite some time. But this is what I mean. For example, you got a very deep move to the downside, got a gap lower, and then price ends up taking that out. So this is potentially what we could see for DXY. Let's so if DXY continues to drop today, then this short might not be as high probability. Interesting. So let's get rid of that. I'll need to see price action. I would love to be able to see there's something like this. So this hide's getting taken out. I think it's a bit too risky taking a short here in this region. I'll be more interested in taking shorts above this. This is Wednesday's high. So usually one thing for those who trade ICT, that in a lot of the cases, Tuesday is where you find the low of the week or high of the week. Tuesdays and Wednesdays tend to be that. Now, because we had such strong, impactful news yesterday, and we had this low, we might actually be seeing the makings of this week's low. Yeah, that could change. That could change this entire setup. That could actually change this entire setup. So definitely keeping my eye on this. Yeah, look at that momentum as we're coming into the open. Let's see, headlines. Futures inch up after Wall Street sell-off. Labor data on tap. Okay. S&P bank stocks lead S&P 500 drop as Powell sparks sell-off. Okay, so banking stocks are leading. Interesting. Yeah, that's a moving train, guys. I'm not going to get in front of that. Definitely not getting in front of that. So there's a book recommendation here by V2. The Little Book of Market Wizards, Lessons from the Greatest Traders. Yeah, I haven't actually read this particular little book. I have read the actual books themselves. But if this is a summary of those books, then, oh man, definitely 100% get yourself this book. Thank you for the share, V2. Yeah, Billy says, I almost do the opposite of what you see on CNBC. Yeah, that's actually very clever. There's an actual ETF of Jimmy Cramer. There's an actual ETF that's actually quite profitable. And this guy is a news anchor that essentially just he gets paid to say what not to do, essentially. But he's telling you, he's a news anchor, and he tells people, right, you should buy this, or I'm really bullish on this, and it usually turns out bearish. Or if he says really bearish about something, it usually turns out bullish. So it's not wrong doing the opposite of what you see on the headlines. Absolutely. Yeah, headlines are inducing. That's what the media is. It does that. The media is a propaganda tool. Yeah, it's not just in trading where it's used to manipulate price and to manipulate the market, but it's also used in everyday life, normal news channels. It's all there to induce fear, greed, and to induce compliance. Yeah, that's what the powers that be, that's what they want. They want compliance. So back to back to what we're seeing now on the 5 minute. Yeah, definitely not getting in front of that. We're just coming up to the open. Let's have a quick look at the Dow. Let's see, what can we see here? Okay, quick check at the daily. On the daily, we are inside this banker block, this daily banker block. Beautiful. We've also, okay, so if we go down to H4, price, seems like price is now reacting towards, it was this imbalance, price reacting towards it, but we've got another one here acting as resistance. Very interesting. Let's go down to H1. Okay, H1, we reacted off this banker block. Interesting. Let's see if we can refine it on the 15 minute. Yeah, beautiful. Here we go. Lovely. This move reminds me of this morning's DAX, this fractal that we're seeing right now. So let's take a quick snapshot at this. Yeah, look at this fractal. We've got previous daily low. We've got equal lows. Previous daily low, equal lows now, and then we've got a move from this liquidity pool. Nice. Okay. Diego, if you're still there, could you just double check what time the next stream is? I'm just
Yeah, sure. 1 sec.
conscious that there might be another stream popping up. It looks like someone else is live. Am I right? Are there 2 lives going on? I think we're gonna have to jump off, Diego.
Okay, let's do that.
Yeah, we've gone over. We didn't even realize it.
Yeah, he's still going live. Mr. Ariel.
Yeah. All right, guys. Well, look, thanks very much, everyone, and for tuning in, and we'll see you guys next week.
Yep. Just gonna post the Discord link again if you guys want more live streams and if you want to join the trading floor. So see you guys next week. 100%, guys. Take care, everyone. Have a good day. Bye-bye.